Hey, ladies and gentlemen, we've got an absolutely record crowd today. Thank you so much for coming. That song was written by myself and my musical collaborator, James Stratton, a couple of weeks ago when we were in Nashville, because I've just completed, in the same car that you saw there, a 7,000-mile tour driving around the United States. And I was very lucky to have my dearest and best friend, Anthony Bailey, do the driving while I sat in the back and tapped away on the new book that I'm going to talk about today, book being called Juvenescence, which will come out at the end of May and which I hope you will find interesting. We were also joined on the tour by James Stratton, my girlfriend Dafina, my brother-in-law Tim Coxon, who's a stalwart of these events, and we had a fantastic time. But there were three reasons for this trip. One was to get a sense of what's going on in America post-Trump. And I can tell you that if I had done the trip last year, I would have put money on Trump to win, because it's quite remarkable when you actually see America on the ground. And I'll go through that in a second. The second reason that we did the trip was to have some fun, which we definitely did, particularly in Nashville, Memphis, and of course Las Vegas, which marked towards the end of the trip. And the third reason was to meet the key opinion leaders who are in the field of longevity and aging, and I'll be talking about them later on in my presentation. But suffice it to say that America leads the way still in most science. It leads the way in most innovation, and it leads the way in terms of its economic performance, dictating a lot of what happens in the rest of the world. And so America is still the very best, but it has many problems. And the first part of my presentation is going to talk about the US. But before we get to that, as you know, at the end of every presentation, every year, and it's been quite a few years now, and I recognize many familiar faces here, and it's great to see you all, I give a list of recommendations. I don't get paid for it. I'm not promoting something that I'm subsequently going to sell. I'm doing it to inform and collaborate with other investors, because that's what Master Investor is all about. It's about diligence, judiciousness, and collaboration. It's not about rant rooms and doing down people who are trying to be entrepreneurial. The year before, we were only up 4%, which was a bit better than the markets, but nonetheless a very disappointing performance. But I did say last year, for those who were here, that my big theme last year was going to be the return of inflation, and inflation would be good for returns. And sure enough, we've had inflation seeping back. Over 2% in the United States, 2.5% here in the UK, 2.8% in Germany, and even in Japan there's glimmers of inflation. And that tends to be in the early stages good for equity market returns. So last year, our average performance was about 30% on the recommendations that I made here. There were a couple of howlers, and I got those ones wrong, but there were some really good ones. There was a lithium stock called Critical Elements, which you may remember, which nearly trebled over the year. And we have a new lithium recommendation for you today, which is actually exhibiting at the show today. So last year wasn't a bad year for us in terms of recommendations, and I think this year won't be too bad, but you have to watch out for some pitfalls that I'm going to try and identify. In order to encourage you to affect the words of my mantra, which is curiosity, adaptability, and application, having an open mind, being flexible in your views, and application being another word for hard work, I'm going to offer, or we are offering, a £10,000 cash prize to the person who gets the performance of any listed company that's exhibiting here, the best performance right over the next year. There's lots of stands there. I want you to go around and talk to the companies, fill in your form, and you have to be here to do it, and there's only one form per person. And you, if you correctly guess which of those companies performs best in sterling terms, will win £10,000 donated by Master Investor. So I thoroughly encourage you to go and do your diligence and look at the stands later on. Don't go right now, though, because I've got some things to say first. Today, I'm going to talk about my market overview, which is the way that I always start my talk. I'm going to talk about longevity as a new big idea, and then I'm going to summarize very briefly at the end. My friend Aaron Banks will come on afterwards and be interviewed by Sven. Aaron, as you know, was a funder of the Brexit campaign and is an absolute expert on social media. So it'll be a riveting presentation, and I urge you to watch Aaron. First of all, the market overview. Let's talk about the United States. The key feature of the US is that it's a very unequal society. When you drive into the non-San Francisco, non-Nashville, non-Chicago, Boston, and New York areas, there is grinding poverty everywhere, much worse than you see here in Europe, and worse than you see in many emerging markets. There are hillbilly shacks on the side of the road. People tend to eat at Dollar General or Walmart, McDonald's or Jack in the Box. And I don't know where the average $53,000 income comes from in the US, because you certainly don't see it in almost all of the middle of the United States. There's tremendous inequality, but there is still a patriotic instinct and an aspiration that people don't have in many other countries. People still think that being American allows you to make it wherever you come from. The answer is that that's not really true. And the cofactor of this inequality and isolation and generally undereducated population is, of course, the health issues that Americans face. Obamacare was a step towards trying to address it. It was a poorly executed and thought-out step, but at least was a step towards trying to get people some universal insurance for healthcare. But almost one-fifth of all American output goes on healthcare, and yet they live 2 years less on average than we do in the UK. They have very high rates of obesity. They overconsume sugar. They don't do enough exercise, and you see it everywhere throughout the United States. And that healthcare issue is something that's going to get worse if what I'm suggesting comes true, and we're going to have to rethink the whole deal about healthcare. So the first impression I got from the United States was a very unequal society, and if Donald Trump doesn't deliver to his core base, then there's going to be all sorts of trouble in the United States. The second thing is that Donald Trump has the idea of rebuilding infrastructure as a way of kickstarting the economy. And that's a very good idea, because American infrastructure, for anyone who's driven on the freeways, anyone who's gone on the bridges, is crumbling. It's terrible. My car was virtually shredded after 7,000 miles, and it was a pretty new car. So he's going to spend $1 trillion, which is about 5% of America's GDP, but he won't be able to spend it all at once, because there aren't enough what they call shovel-ready products or projects to put that money into. So the effect will be rather minimal over the next few years. But of course, it's also going to add to the debt burden of America, which is not in any way trivial. And he may not even get it through Congress. As we've seen, Obamacare and his reform of that has been blocked by Congress, and that's been put on the back burner. The third thing is that higher interest rates are coming. The economy isn't very robust. Productivity remains low in the United States, but the economy is growing by over 2% a year, and there are wage pressures building up, contributing to inflation. So the Fed has signaled another 3 rate rises this year, and you will see a gradual tightening of monetary policy in the United States over the next year. Whether you see a loosening of fiscal policy or not, we don't yet know, and we'll have to wait for Donald Trump's detailed plans. There is also this idea that many of you will be familiar with, that US dollars are going to be repatriated. There are $2.5 billion sitting offshore from foreign profits, which at the current rate of taxation would be taxed at 35%, were they to be repatriated to the United States. And the idea is that's going to somehow or other push up the US market and push up asset prices in the US. Well, let me tell you that in 2004, in the last amnesty, tax amnesty, to bring money back from foreign profits, only 10% was repatriated, because most of that money is actually used by foreign subsidiaries of US corporations. And secondly, most of it already sits in US dollars, so it's not going to push up the value of the US dollar. So we have, with all those problems, and I don't really like to talk about problems, but we have against that a market. The stock markets in the US are priced to absolute perfection. We have a cyclically adjusted PE ratio devised by the great Robert Shiller, which you're probably familiar with, those of you who invest in the market, which is at an all-time high. It's the average PE ratio over a number of years, and it's at 29.5 times earnings. So if you buy US stocks in the round, and there are some great opportunities in the US, and I'm going to talk about some of those at the end of my presentation, but if you buy US stocks in the round, you're setting yourself up for a fall. The second thing is that the US stock market has become highly concentrated. Half the companies on the US stock market have been delisted since 1996 through takeovers, through private equity deals, and so forth. So the range of stocks is much more limited than it used to be, and the ownership has become more concentrated. Mutual funds own 1/3 of the United States market. That's significantly up on where it was in 1996 or 1976. And ETFs are very, very big players in the US stock market, and that is a danger point for the US market. Now, Vanguard, which is the leader in ETFs, has approximately $4 trillion under management, and $1 billion comes into its ETFs every single day. If everyone wants to redeem or sell their ETFs at once in a market panic, and who's to say what might trigger such a market panic, it will exacerbate the fall of that market, and we could see a real spiral downwards. So I'm recommending that if you are long the United States market, other than specialized stocks or specialized areas, I would be extremely cautious on the grounds of valuation and concentration. Furthermore, the greed index, which is something that people look at in terms of is the market overpriced or underpriced, is near an all-time record, and mutual fund cash is very, very low indeed. So let's get to the next big fault line in the world economy, and of course, this is Brexit. Now, those of you who have listened to me know that I'm an economist by background, and I don't take a political stance. I'm not interested in the sovereignty or immigration aspect of Brexit, but I did believe that Brexit was going to happen, and I believed it was going to happen in a positive way, as far as I'm concerned, because of the problems in Europe. Europe at the moment has a dead cat bounce going on in some areas. There's a revival of growth in Europe from very, very sluggish or negative growth for the last 8 years since 2008. In some countries, such as Italy, they haven't had growth for 20 years. So the monetary policy has begun to work, the huge amounts of liquidity that have been put into the system by the European Central Bank, and there is some revival in the European economy. That doesn't mean that it's a good place to invest, because the fundamental problem of Europe, which is that it overexpanded its membership, that it is actually a protectionist trade zone rather than a genuine free trade zone, and much more importantly, that the imposition of a single currency without a single fiscal policy was made 12 years ago, introducing the euro, which is the most disastrous economic invention in the history of the 21st and 20th centuries. The euro remains in place, but it's a very, very fragile currency. And last year I predicted that within 1 to 5 years, the euro would in some form or another break up, and I reiterate that prediction. That doesn't mean that you shouldn't buy euros or buy euro assets, and I do have some predictions in that respect. I would actually say that the euro is significantly undervalued against the United States dollar at 107 against the US dollar. It's probably properly valued against the British pound, so there's no upside or downside in buying euros with British pounds. But the problem is that if the euro does break up into a hard and soft block, or back into national currencies such as the Deutschmark, or the Italian lira, or the Spanish peseta, or the Portuguese escudo, or the Greek drachma, we don't know what's going to happen in that process. And furthermore, unlike Brexit, which was well signaled, there was a referendum, there was lots of debate, there's been many months now, 9 months, until Article 50 is triggered. And by the way, today is the 60th anniversary of the European Union, in case you didn't know that. Unlike that, there will be no signal as to when the first member of the Eurozone decides to leave. They're not going to go to Mario Draghi and say, by the way, we've decided to leave your currency, because he will do everything he can to thwart that move, because as soon as the first one leaves, there'll be other ones that want to leave. But let's face it, that currency, which has imposed this one-size-fits-all monetary policy, has caused untold damage to generations of people in the peripheral nations of Europe, and indeed in France and in Italy. Unemployment among youths is exceptionally high in those countries. The countries are unable to devalue, so they become increasingly uncompetitive, and the internal devaluation that is required of them means that more people are unemployed, and the economy, they don't import as much as they used to. The economy is basically poor, and Greece today is a food bank economy. And there's no improvement in Greece. I don't understand why Alex Tsipras didn't take the advice of that commie finance minister with the leather jacket who said, let's just leave the euro now. He should have done, because Greece has gone through another 3 years of desperate, grinding poverty. And if it carries on with the euro, that will continue. If Greece issues a new currency tomorrow, the new drachma, let's say, it will fall by 50% against the hard currencies of Northern Europe, or the remaining eurozone, and Greece will revive very quickly in economic terms. The problem is that Greece will have to repudiate its debts, and its debts are substantial. Italy would have to do the same thing. But believe me, one of those countries is going to do that. And in that turmoil that results from it, I can't forecast exactly what's going to happen, but do you remember on the day of Brexit, the markets fell and then they recovered very quickly? Do you remember on the day that Donald Trump was elected, the markets fell and they recovered very quickly? I can tell you, I will have my buying boots lined up to buy prime European assets, stocks, some corporate bonds, and the currencies that are going to be strong. I'll have them lined up, because Europe, once it's liberated from the chains of the euro, can do really well. And European earnings per share, which have only risen by 300% since 1987, will start to overtake those of America. And by the way, America's have risen 550% since 1987. So Brexit, to me, is a sideshow. Things are not too bad in the UK. All the economists, all the artistes, all the politicians and all the international organizations who, let's face it, they said the day after Brexit, the day after the vote on Brexit, if it was to leave the European Union, there would be Armageddon, are all wrong. And today they're like the American guys who go up the hill every year predicting the end of the world, and it doesn't happen, but they go down to the end of the hill and they say, it'll happen next year on this date. So they are constantly pessimistic about the prospects for Brexit. But I honestly don't think it's going to make much difference to the UK, which, once again, was the fastest growing economy in Europe last year. And I believe this year will be nip and tuck with Spain, Germany, and ourselves. So we are doing well. But we are 17% of Euro GDP. Germany is approximately 20%, and France is 14%, and Italy is 11%. So we are a major factor in the European Union. And it's the amount of money that we contribute, which was a big focus of debate during the campaign, there were lies on both sides about it, is actually not trivial. We've paid, over the years, £500 billion into the European Union, and on a net basis, after the Margaret Thatcher rebate, we've paid £380 billion. So what could that buy you? Well, it could buy 3.3 years of the NHS, it could buy 9 HS2 projects, it could buy quite a few thousand Cristiano Ronaldos and 17 aircraft carriers, and we seem to have frozen, sorry. Here we go. This man, for Jean-Claude Juncker, who, as you know, is fond of wine, and red wine, by the way, is quite good for you in moderation, as I will suggest later on. It could buy him the most expensive wine, which is the wine that he likes, Chateau Latour Grand Vin Pauillac, which I've never had, but I'm inclined to try it now. It could buy him 633 million bottles, or 53 million cases of his favorite wine. So the amount that we pay is not trivial, and we, of course, are going to get that money back. And by the way, whatever exit penalty there will be small. It will not be £50 billion. So I'm not too worried about the UK, but again, I don't think the UK, apart from small companies, some big companies, which are properly valued or even undervalued, the general market is not a screaming buy by any means, because as with other markets, they've risen quite sharply in the last year, and it's not particularly cheap. So Europe continues to move from crisis to crisis. Though we'll lose a member of the Eurozone sometime in the next few years. That will create an unbelievable buying opportunity in certain circumstances. I'm going to be there with my boots on. These target 2 balances you may have heard of. This is basically the overdraft at the Bundesbank of all the other countries. When one of the members leaves and when the Eurozone breaks up, Germany will be owed something like 800 billion euros by the other members. Italy will owe to, effectively, Germany 376 billion euros, and there is no way that debt is ever going to be repaid. So the whole of the European banking industry is going to have to be reorganized, recapitalized, bailed in, whatever it is. It's going to be tumultuous, but it will be the best thing for Europe. And thank heavens, and this was my argument all the way along, we're sitting in the lifeboat in the English Channel while the Euro Titanic sinks and then reforms in the original spirit 60 years ago, which was peace, cooperation, free trade, but not all the other bells and whistles that federalism has attempted to impose on the 28 members of the European Union. And you can see that the beginnings of friction and tension in the markets are occurring in the so-called spreads between French bonds, Italian bonds, and German bonds, which indicates in a normal society, in a normal economy, they would be identical because the European Central Bank is dictating monetary policy. But you can see that investors are somewhat skittish about Italian prospects and French prospects. And by the way, Aaron Banks does think that Marine Le Pen has got a chance of winning the election in France, particularly if it's against Macron. And Aaron uses a lot of techniques to forecast elections. I don't believe that she will win, but it's always a chance. And we were all blindsided by Trump, and most people were blindsided by Brexit. So there is a possibility there, which may just cause this tumult that I've been describing. Now let's move to emerging markets. And the key emerging market is, of course, China. And last year, I recommended the Fidelity China Special Situations Fund, formerly run by Anthony Bolton, which was selling at a big discount. It's still selling at a discount, because I thought China looked cheap. I thought that China could keep all the balls in the air from a monetary policy point of view, and it could keep its growth going. And sure enough, it's been a pretty good performer. It's up about 35% in the last year. I still think China has got the capacity, because it's a command economy, to keep the balls in the air and to keep growth going. But at some point, the debts that have been built up in China are going to come home to roost. So, since the financial crisis, half of all new credit created in the world has happened in China. And in the last 10 years, China's share of total world credit has gone from 5% to 25%. There are lots of bad loans embedded in the Chinese system. There's lots of misallocation of capital. And even though it's run by a communist, state-allocated government, they can't keep those balls in the air forever. So this is another fault line that we should look at, but I don't think anything's going to happen of any significance in the next year. So you can hold on to that Fidelity Fund, but remember, you're renting it, you're not owning it for the long term, because sooner or later, there will be a significant problem in China. Debt to GDP in China is now 255%, by far the highest in the world. My favorite market for this next year, that was a snip, a very, very small snip, I have to say, of... Right, thank you. I Think I'm Turning Japanese by The Vapors, a 1990s hit, I believe, kind of catchy. But my favorite market is Japan, because Japan's had 20 years of deflation. They're just beginning to come out of it. Sure, Japan's got lots of problems, an aging population, bad demographics, no immigration, but it's also got lots of good things going for it. A very ordered society, hard-working society, and most importantly, its stock market is still about half the level it was when it peaked in 1989, in nominal terms. Forget about in real terms, where it's even more degraded. Japan is about 14.5 times earnings if you look at the whole market. The dividend yield is approaching 2%. And I think the Japanese, and the price to book is about half the level of the S&P. And the Japanese companies are taking action to buy back their own shares, increase dividends, improve profitability, unwind the zaibatsu cross-connections that characterized Japan for so long. And if I had to bet, I'd say a pair trade, long the Nikkei or long any Japanese index like the Topix against any major US index will be a very positive one. And by the way, I would have said hedge the currency a year ago, but now I think the yen is probably fairly valued. And with Donald Trump breathing down the necks of people who apparently are currency violators, I don't think there's going to be a lot of movement in the Japanese yen. Even though they've tried to fry their currency comprehensively over the last few years, I think it's probably about fairly valued. So I'd buy the Japanese stock market as my major macro equity call for this coming year. Last year, I told you to buy gold and silver. I said put a larger percentage than you normally would for insurance purposes into gold and silver or into gold stocks or gold funds or gold ETFs, and I would recommend that you maintain that position because of the uncertainties that I have described earlier. Amanda Van Dyke, a very effective speaker, spoke earlier on about gold, and she has the top-performing gold fund in the world at the moment, I believe, and she's got a stand here, so I suggest you go and talk to her. And of course, my old friend Mark Child has got Condor Gold, which looks very promising indeed, and in which I recently added to my investment. So in macro summary terms, I would say the central bank-derived misallocation of capital has distorted a whole load of stuff, caused a whole load of bad stuff in the world. We're beginning to come out of that. There's tapering occurring here in the UK. There's tapering occurring in the US. Even the Japanese are revising their excess monetary policy position to a certain extent. And the European Central Bank, believe it or not, has shown the first hints of tapering. But the imbalances within the European Union remain, and they're very, very substantial. The US dollar is too strong. I would recommend, and I'm going to say at the end that I like the Mexican peso, believe it or not, despite that wall, which we're probably not going to build, by the way. Despite that wall, the Mexican peso looks like the cheapest currency in the world, and I'd buy it. And secondly, I think the Malaysian ringgit, if you can buy it, you want to buy a house in Malaysia, it's a good time to buy the Malaysian ringgit. But equity and bond markets are priced to perfection. Bond yields have risen a little bit, except in Germany, where they remain very low because of foreign capital inflows. People are worried about the breakup of the euro. They buy German-denominated short-term bonds as a preference. But I think, generally speaking, you've got to be curious, adaptable, and you've got to put in the hard work and the application to find individual stocks, because if you just buy the markets, you're going to be sucker punched. You'll be waiting a long, long time to make a good return. So do your diligence, and hopefully you'll win that £10,000 when I'm on the stage next year. Now, the things I've spoken about in the past, and these master investors, have included the global financial crisis, Brexit, the Internet of Things, the appreciation of the yen, how I thought a couple of years ago that prime London property was way overpriced, gold bull market, age of automation. I've got a lot of stuff wrong. I talked about 3D printing, and that's done pretty well for us in the last year with Aurora Labs, who are here, and I would recommend that you see them. Robotics. But generally speaking, I hope I've thrown up some interesting subjects that would not otherwise be covered in investment seminars. And today, I've got one that I think is very interesting, very apposite, very zeitgeist, and is not going to just make us money, but do great things for us as human beings. And if you will bear with me, I'm going to very briefly cover the subject of my new book, which is the next big thing, in my opinion, leading to the money fountain that I always try and encourage people to find through curiosity, adaptability, and application. And this money fountain is investing in the age of longevity. And this gentleman here, who's on the screen, is Aubrey de Grey. Some of you may have heard of him. He's got a 3-foot-long beard. He's a bit eccentric in his dress and demeanor, but he is the prophet of longevity. And he believes that the first person, not to live to 150, which in his mind is trivial, but to 1,000 years old, is alive today. It doesn't stop, as we saw last week when we had dinner with Aubrey, him having a couple of double scotches at dinner and putting sugar in his tea, because he thinks that that's not really important. The much more fundamental stuff at the cell and gene level is going to occur to facilitate a much longer life for everyone in this room, in which case we will all be examining the fundamental trajectory of our lives. Now, most people will be skeptical about that. And Aubrey calls this the trap of Titanus. So Titanus was a Greek lyre god, lyre as an instrument, not L-I-A-R, who was seduced by, I think it was Eos. And Eos asked Zeus to give Titanus the gift of immortality, but forgot to ask for the gift of youthful immortality. So poor old Titanus got older like everyone else, and in the last stages, because he was immortal, he was very elderly, I think is the best way of putting it, and he remained like that forever. That's the trap of Titanus. We all think of people dying at 85 or 90 or even 100 years old, and some people dying younger of orphan disease or accidents or tragic cancers or whatever. We all think because that's what we're preconditioned to do, and we try and ignore aging. We don't look at aging as a disease, which is what it's going to be in the relatively near future. We put it out of our minds. And one of the key factors that's going to happen in the next 2 or 3 years is that the FDA, the NIH, all the big medical institutions around the world will start to think of aging as a fundamental disease and not just as a condition that we are pre-programmed to have in our later years. And Aubrey de Grey has been characterized as a charlatan, a crackpot, and so forth. But now there are very serious people, including internet billionaires in California, who believe this is possible. And they believe that some of the technology needed to make this happen is here today. And hence the big opportunity for us in terms of investing in longevity and also benefiting from the treatments that are here today. I'm writing the book on it. I'm not going to go through any great detail on this, but I really want you to pay attention to this because I think we can have a huge money fountain with this. This, as you know, people throughout the centuries have looked for the fountain of youth. And this is a medieval painting by Lucas Cranach of exactly that. But the elixirs, the potions, the treatments, and all that sort of stuff, none of them work. Because the people who lived in 1900 and who lived to half the age that we on average live to today, if given all the same stuff that we have, antibiotics, sanitation, reasonable education, better diets, not so much in the way of industrial accidents and a decline in smoking, would live just as long as we are. Because human beings, at the molecular or cellular level, have not changed. There hasn't been any evolution since 1900 that's caused this expansion, this doubling of life expectancy over the past century. What we are looking at is actually changing the fundamental cellular, molecular biology to extend life beyond that which we even a few years ago, thought was impossible. Aging is extremely complicated, which is why I'm going off to Austria on Wednesday for 6 days and 6 nights. I'm doing nothing except getting my head into the book and writing about it, because for a layman like me, to distill it for most of you are lay people, for people like you, is a really hard project. There are multiple genes involved or implicated in aging. There are multiple pathways. There's lots of new therapies coming along the line, and there's lots of potential. And it's really hard to distill it down, but I'm going to do it, and I hope some of you at least will pick up a copy of the book Juvenescence when it comes out at the end of May. It's very, very complicated. But let's look at our progress so far in aging. And if we could think that the same thing that's happened in the last century could happen in the next century, except 3 times or 4 times more, then that's the sort of vision you should be looking at. It took 4 million years to produce an 11-year increase in average life expectancy from 20 to 31, and it's just taken us 115 years to more than double our life expectancy with a 41-year increase in those 115 years. So it's possible. And when I was on my trip with Anthony Beatty, we did a tour of the Boeing factory in Everett in Washington. I don't know if any of you have been there, but it's absolutely enormous. And it was only 100 or so years ago that Mr. Boeing came up with his great invention. The little planes that the Wright brothers had flown and were still the sort of, the triple-decked, sort of very odd-looking machines, triple-winged rather, only had 1 seat. And he came up with the idea of putting 2 seats in it. Now, I will bet you that Mr. Boeing didn't think that 100 years later, which is a blink of an eye in time terms, would be churning out Dreamliners and jumbo jets, planes that would just be unimaginable. And I want you to think of the longevity science as being exactly like that. Put yourself in his position. He didn't have that vision, but we can and should have that vision. We are going to live much longer lives than any of our ancestors could possibly have imagined. We're going to break the bounds of the upper limit of living. So aging, fundamentally, is just wear and tear minus repair. And when the repair mechanisms of the body, when our DNA damage gets to be too much, then we go into entropy, molecular chaos. The second law of thermodynamics applies, and we end up dead. It's not necessary. We will all end up dead, by the way, but it's not necessary for it to happen so quickly. These are the two supposedly oldest lived people ever. One is verified, and that's the famous Jeanne Calment, who died in 1997 in Arles, having lived there her whole life. And there's no key or clue from her life. She gave up smoking. This was the day that she gave up smoking, our 117th birthday. There's no particular feature of her that says that we better do what she did, then we'll live to 122, which is the eventual age that she died at. And this fellow here, Mbah Goto from Indonesia, claims to be the oldest man. But it's funny that the countries in which the oldest lived people exist are those which have very poor birth records. In other words, people, when they get to a certain age, like to claim that they're actually older than they are, or they make claims that they're centenarians when they might only be 90 years old, whereas the rest of us are mostly lying about our age. Older people like to up their age rather than, they lie about it in an upward fashion rather than a downward fashion. Now, as you know, when I'm moving to aging as a disease, aging is the principal cause of the diseases that eventually kill most people. There are 150,000 people who die on the planet every single day. And 100,000 of those die from the holy or negative trinity of metabolic disease, of neurodegenerative disease, of cancer, and of course cardiovascular disease. And I put the metabolic and the neurodegenerative in the same broad category. Those are the diseases of aging. And there's lots of people out there who are working to cure those diseases. There are companies here today, Salvarex is a good example of that, who are working to use immunotherapy, which you've heard about from me before, to improve the chances of surviving cancer. And already survival rates in cancer are almost biblical in some areas as a result of that. And I do believe that in 10 to 15 years' time, cancer will be curable, or it will be a disease that you live with as a chronic condition. Similarly, in cardiovascular, things like statins, beta blockers, ACE inhibitors have, for over a long period of time, and the simple fact of taking a mini aspirin every day, have kept heart attacks and strokes at bay. And the number of people who die of heart attacks and stroke at early age has declined precipitously over the last 20 years. There is a new class of drugs called PCSK9, which is extremely interesting. It's rather expensive, but it again improves the potential for cardiac health to be vastly better than it has been. And there may be a vaccination coming up, anti-PCSK9, that would be really, really interesting and would add to lifespan. In neurodegenerative disease, Alzheimer's is the one that everyone is frightened of. 200 drugs have failed in Alzheimer's disease in the last 20 years. But it's interesting that these drugs, actually the A-beta drugs, the A-beta antibodies, work very well in clearing plaque, amyloid plaque, which is a characteristic of Alzheimer's. But they don't seem to address the central issue of Alzheimer's. And that's maybe tau protein tangles or a combination of things. But I can bet you that in the next 5 or 10 years, there'll be a breakthrough there. So all those, that holy trinity of disease, and of course, diabetes is included in that, and there are new categories of diabetic drugs that look very, very promising, are going to add to average life expectancy, but not to finite life expectancy. And I would say that if we can cure or address all of those, as we are now doing, we will add something like 15 years to the average life expectancy of human beings, which in developed nations is about 83. So we'll be looking at sort of sub 100 for, in the relatively near future, the next 10 to 20 years, just on the basis of those therapies that are being brought in. Now, there are new and additional therapies that are going to add the extra 15 years of life, and that's going to take average life expectancy up by 30 years in the developed world from the current level. And that's the really exciting thing. But first of all, is aging pre-programmed? Well, there are elements of pre-programming to aging, technical elements, but generally speaking, no, it's not pre-programmed. We're not destined to die. And there are creatures out there which appear to be immortal. Greenland shark, jellyfish, the company Hydra has a representative here today, Lindsay Wu, who is a super smart guy, and he works with David Sinclair, who we went and visited on this trip. And they announced in the last couple of days some amazing stuff in anti-aging. I'd suggest that you look out for him. He's very tall. You can't miss him. He's really interesting to talk to, so go talk to him. There's another company called In Silico, which does big data analysis in aging, and I would definitely go and talk to them as well. You've also got the Great Basin bristlecone pine that lives forever, apparently, and the American lobster seems to live forever. So if they can live forever, and we also have immortal cells within our own bodies, which are the germline cells, and cancer cells are immortal, and if you want to read up a great story on that, read the story of Henrietta Lacks. These researchers are using, in order to determine what are the factors involved in aging, how can they be reversed or how can they be improved, they use 4 basic models. They use yeast, where a lot of discovery has taken place. They use mice, and I've seen a lot of mice recently. They use the C. elegans worm, which has a 2 to 3 week lifespan typically, and they use fruit flies, which have been used for quite a while in fundamental research. And these models have thrown up all sorts of interesting stuff about the genetic makeup of why we age, because there's a high affinity of DNA between us and, believe it or not, these creatures, particularly the mice. And what are the factors that cause that aging, and what are the factors that can reverse it? So, for instance, in the Cynthia Kenyon labs in UCSF, they've made earthworms live 10 years longer by using caloric restriction and temperature control than they otherwise would normally live. A mouse is alive today that's going to live to 5 years. Now, when you think the average life of a mouse in the wild is 1 year, and in a laboratory it's a maximum of 3 years, that's a pretty impressive improvement in mouse longevity. But other animal models are being used at the moment. And for instance, people are getting their dogs cloned, or they're getting their dogs injected with stem cells, they're getting their dogs' telomeres looked at, because we love our dogs and they don't live long enough, they're not concurrently living with us. And when I announced to my 2 dogs that they were going in for some experimentation, you can see the look on their faces. They weren't too happy about it. I'm just joking, by the way, in case anyone's from the RSPCA here. That's Horatio and Isis. Isis was unfortunately named. But as we say, we won't bow down to terrorism and change her name. Now, life expectancy is much changed in the last 100 years. If you look at the list of things that killed people just 100 years ago, you had things like influenza, tuberculosis, viral infections, bacterial infections, sepsis, and we don't really have that anymore. And even though there's a lot of talk about antibiotic resistance and so forth, I wouldn't worry about that too much, although antibiotics have been way overprescribed, particularly in farm animals and in agriculture in China. I wouldn't worry about that too much. Today, the diseases that we die of are the diseases of aging. And although people get cancers younger in life, and although people do die younger of heart attacks, it's typically when you get older that you die of these conditions. And they are being addressed, as I said earlier on. But to get to the next big step, where the red line is, we need new treatments. And along with those new treatments, we also have to moderate our lifestyles. As I said earlier on my trip to the United States, this was the kind of vision that Auntie and I saw when we went into various saloons for our stops halfway through the day. The obesity levels are unbelievable, and obesity causes diabetes, and there is an epidemic of diabetes in this world, as you are aware. There's also still too much smoking, don't drink too much. There's a lot of sort of obvious stuff. Drink a bit of red wine, eat fruits and vegetables, take some antioxidant supplementation, not too much of it though, and do some exercise. Those are the statement of the obvious, and there's lots and lots of books out there that will tell you to do exactly that in various ways. But the big bridge, the bridge that's going to take us from the 15 years if we live healthily and we use current treatments and immunotherapy develops and there's better diabetes control and so forth, that's 15 years. The next 15 years requires more. The actuarial escape velocity to take us to an average life expectancy of 110, which is coming in the next 10 to 20 years, requires some new experimental options to become real in the general population. One is a very old diabetes drug called metformin. I don't know if any of you have heard of it, but it's been around since 1957. And it's been observed, rather like aspirin has been observed, to have very positive protective effects against cancer, Alzheimer, and pro-aging healthily effects. And metformin is now, for the first time, being studied in a 3,000-patient study undertaken by Dr. Nia Barzilai, who I spoke to last week, in a very exciting study. It's the first study ever that's been funded to look at the effect on aging and a compound. Because if you think about it, if you're a big pharmaceutical company, you can't hang around for 20 years to see if your drug works because you won't have any economics attached to it. You know, by the time it gets to work, it'll be off patent. And metformin doesn't cost anything. It's 1 cent or 2 cents a day. But it is what every single person in the research area of longevity takes on a daily basis. So that's telling you something. And diabetics who take metformin versus diabetics who don't take metformin typically live 8 years longer. And diabetics who take metformin, who normally would live 14 years less than the average population, live as long as the average population. So it has some protective effects, and they're not fully understood, but they're working very hard to understand them. Resveratrol is an interesting thing. It's a compound found in red wine in limited quantities, so there's no point in drinking 5 bottles of red wine a day, because although it might have some pro-aging effect, you'll for sure get cirrhosis of the liver, which has the opposite effect intended. But research into resveratrol is still going on. The most exciting thing you may have read about 2 days ago from David Sinclair's lab. He's a truly brilliant, lovely guy, as is his colleague, Lindsay Wu, who I recommend that you talk to, as I said earlier, is the nicotinamide family. And they've developed something called NMN, which is a precursor of NAD, which is in every single one of our cells. It's very important to cellular health. And taking this compound, and by the way, they gave me some of it, and unfortunately my Juvenescence has not appeared because we left it in a hotel room in Nashville, and because it looks like a illegal substance and it's vile white sort of powder stuff, they threw it away when I tried to reclaim it. But if you take this every day, and David Sinclair's been taking it for a while, he looks absolutely amazing. His blood sugar level's gone from that of a 50-year-old, which is what he is, down to a 28-year-old. He's lost weight without doing anything, apparently, to change it. And he still drinks the red wine. We had quite a bit of it in Boston when we visited with him. So there's that. There's rapamycin, which you may have heard of. It's from soil discovered in Easter Island in the 1970s, and it's a cancer drug. But it acts as a stressor, and the stress induces hormesis, which is good. It's like caloric restriction does that. If you don't eat very much, you don't eat to the point of starvation, but you eat very moderately, you'll get the same effect, and you'll live a bit longer, although it will feel like a lot longer because you won't be eating anything apart from lettuce leaves and Ryvita for the rest of your life. So I don't recommend that, but rapamycin seems to have some mimicking effect of that, and there are new versions of rapamycin, so-called rapalogs, that are being developed today, which are less toxic than rapamycin. Rapamycin, being a cancer drug, has toxicity attached to it. There are other ones, like bromocriptine. There are organs that are going to be grown in pigs and printed. There's a company called Organova that prints biotissue, and it's going to be printing organs sometime in the next 10 years, and pigs will be producing organs that will be reimplantable into human beings without immune reaction. So that will just be absolutely fabulous. Using your own stem cells, which are autologous and which will not cause the typical problems of organ transplantation, which is reaction, and so you have to take immunosuppressive drugs. So there's also gene therapy and all sorts of other good stuff that's going on at the moment. I'm not going to go through these. You can get copies of the slides, as always, from Anthony Chow or my office here in London. But sirtuins are really interesting, and that's what David Sinclair has been working on. There's rapamycin, there's metformin. There's all sorts of stuff going on. There are senolytic drugs which clear the senescent cells, which are somewhere in between apoptose cells, i.e. dead cells, and healthy cells, and they're pro-inflammatory. They sit in the body causing trouble to neighboring tissue. And we all get more of them as we get older. And there are now drugs out there that are shown to clear them. And that's going to have a remarkable effect. And I've got a picture of a mouse that's been given a senolytic drug in a second. This is our visit to the labs in Harvard 2 or 3 weeks ago. And this is 2 mice, identically aged. One was given the senolytic cell, and you can see he's not looking very, he's looking great, whereas his companion who's not been given the senolytic drug is looking very aged. thinning hair, graying hair, and can't move as well. And this treatment, which was a one-time treatment, has completely reversed the aspect of this aged mouse. These mice were about 75-year-old in human terms when one of them was treated. Now, if I'm right, and we are about to go into an era in which there's another 30 years of life expectancy, and then subsequently, gene therapy, cellular manipulation, understanding of the Krebs cycle, the typical movement of the cell, and doing things with it, along with, for instance, CRISPR or the new gene editing techniques, we could live way beyond 150. I don't think Aubrey's right about 1,000, but we could be living 150, 200 years. The whole trajectory of lives change. Conventional education model, going to school at 5, leaving at 18, going to university, then going to work and retiring at 65, will be over. It already is, because people can't afford to stop working at 65 years old anymore. We'll work longer and we'll have multiple careers. The issue of do you have children will come up, because what's the point of having them if you're going to be living for 200, 300, 400, 500 years? And the determinants of lifestyle, of life expectancy rather, will be war, famine, plagues, accidents, murders, and that sort of thing. It won't be your own cellular biology, which by then will have been much, much improved. So a lot of stuff is going to be defunct. The number of people in the world will start going down, and I saw a guy from McKinsey the other day, a very effective speaker, who said that populations are peaking everywhere in the world. Even in places like India and Africa, they're beginning to peak, and that the world population, far from going to 15 billion, will start to decline in the next 5 to 10 years. Whether he's right or wrong, I think that this rapid increase in longevity will have that sort of effect, an accelerated effect on the decline of world population. We've met a whole load of key opinion leaders in this area. They will be highlighted with their individual boxes. But we met basically everyone except for the Google people who are working in this area, because Google is very secretive about everything it does. So it was a fascinating and amazing trip, and I'm awfully grateful to these scientists, these science leaders, for giving me their time. These are some of the people that we met. Dr. Bortz is a great, vigorous fellow, 88 years old. We met Len Hayflick, who came up with the Hayflick limit that some of you will be familiar with. We met David Sinclair, obviously. Laura Deming, who is 22 and did her undergraduate degree at 12 years old at UCSF, and has been working in the longevity space ever since then. I mean, it does beg the question why a 22-year-old is so interested in longevity, but there you have it. Nir Barzilai, and so forth. And there are some public companies in longevity that you can look at, and there's plenty of private ones, because this is a brand new space. There's a company called Cobar, which we've got a few shares in, which is doing interesting stuff in mitochondria, and I'd have a look at that. Editas is a leader in CRISPR technology. You all know about CRISPR technology, and the iterations, the further improvements to CRISPR, a very, very accurate way of inserting new DNA or taking out old DNA or altering DNA to improve human health. Organova prints tissues. Those are public companies, but there's plenty of private ones that some of which are here that you might want to look at as well. In terms of reading about this, I'm going to be writing regularly on this for the Master Investor, so please, if you don't already read it, get it. It's free. And these are some of the scientific publications I think are worth noting and having a look at as we move into the age of longevity. Now, I always give you some ideas. Some of them are good, some of them are bad, some are in between. Every year. I said gold and silver, buy the Nikkei. The Korean equity index looks undervalued. Korea looks actually cheaper than Japan, but it's harder to buy. I'd short French bonds and Italian bonds for the reasons I enumerated. And here are the long ideas, some of which are here today: Condor, Synergy, Avation, and I would actually go short, even though it hurt me last year, Amazon, because I think Amazon's reaching the limits of its size, and Walmart, which is everywhere in the United States, is now doing quite good work in online stuff, and their online sales are rocketing, and they will be a very formidable competitor to Amazon in the US, which remains, the US remains its biggest market. I like Salvarex, which is a company that was founded by myself and my partners, reversed into a shell here in the UK, and is doing fantastic stuff, so have a look at that as well. We have a man here called Alex Pickett, who's one of our partners. He is incredibly knowledgeable on all things to do with biology, but particularly in this aging field. And he's the head of our new company, Juvenescence, which is not raising money, but will do in due course. And if you can seek him out, I think he's at the Salvarex stand. Do have a word with him, because he's really a brilliant find, and we're very, very lucky to have him working with us. In terms of short, I was really long Google, and the number one recommendation I made, it's now called Alphabet, in the Fast Forward book, which some of you are familiar with, was to be long them because they had all the technologies. And they had an ad machine that was growing very quickly. I now think that Google is going to be regulated. Information will be a regulated utility in due course. And this guy from McKinsey was very interesting. He said he thinks that people are going to get paid for the use of their data by Facebook and by Google. That's going to be a government mandate because they're making too much money and they're using people's data without any. We are the product when we go on Facebook or we go on Google. And there's going to be some equivalence. There's going to be some introduction of a fee to the consumers who are the product of Google. And I trying to work that out in my mind, but I think it's a possibility, and it's one to explore. I go short Deutsche Bank. It's doing a huge capital raise. It's still fundamentally not fixed. And of course, Amazon and long Walmart. In summary, the macro picture is confused. It always is, but it's particularly confused. And I would say, out of all the murk and the fog of uncertainty that surrounds markets, I would buy Japan. I do think that the American Titan stocks are riding for a fall. And I can't tell you why, but I just have that instinct that that's going to happen. And I would, in general, stay away from the US market. Longevity is going to be our new money fountain. Hopefully we can find the right companies to invest in. And it's going to transform, as I said earlier, the trajectory of our lives. Now, last year, my friend Richard Reed and his wife Nadia, I don't know if they're here today, but they came, and she was one day away from giving birth to this young lady, who is now my goddaughter. She's called Bay Rose. And Bay Rose, at the moment, theoretically has a life expectancy at her age, which is 1, of 83 years. But actually, I think it's going to be at least 110 years. So that means that she can go to a lot more master investor shows in the future than originally she would have been able to go to. And here they are all piling up to 110 versus 83. Ladies and gentlemen, my sister is going to hand out pamphlets on the new book. I hope you'll pre-order it. There's been thousands of orders for it already. I hope you'll read it. The profits go to charity, but it's really the most special book that Al and I have worked on. We're really super excited about this area. We're super excited that so many people came to Master Investor. And as always, I'm really, really grateful to you for turning out on a Saturday to listen to all the speakers. So thank you very much indeed.